Morning everyone, and welcome to our second episode of RSM Audit Unlocked. We're very excited to have you here in Brisbane. I'm Aimee and I'm a partner from the Melbourne office where the coffees are strong and the audits are stronger.
And I'm Jess, a director in the Brisbane office, and Brisbane is turning it on today for us.
Yeah. So we'll be your co-hosts where we explore the world of audit and assurance, everything from technical updates to career journeys, hot topics, and some behind the scenes moments that make audit a little bit more interesting. So between us, we've worked between the US, Australia, and the UK, gaining first-hand insights into how audits are approached around the world and building great relationships along the way. So whether you're working for an ASX-listed company, fast-paced startup or not-for-profit, we know that financial reporting comes with its fair share of complexities and we want to make that a little bit easier. So in each episode, we'll unlock what auditors are really looking for when we're dealing with complex accounting areas and providing practical solutions that we see. So whether you're a CFO, a financial controller, or a part of an audit committee, this series is for you. Let's help you level up your next audit and make financial reporting feel a little bit less daunting and maybe a little bit more fun. So let's get into it, Jess.
Sounds good.
Yeah, so today's episode is Preparing for Audits, a CFO's guide of how to make an audit efficient. So how many times have you heard, we thought that we gave you this already?
Oh my gosh, Aimee, so many times. Like, honestly, it probably happens 2 to 3 times per audit. And it's usually for something super important, like a technical memo or a key reconciliation.
Yeah. And look, we always work closely with the finance team and we understand that there's always priorities and conflicting deadlines with the finance team. But when the audits are not a top priority, that's when they drag on and are really inefficient and painful for everyone. So today we're going to be talking about what actually slows down audits and go through top 5 common inefficiencies as part of an audit. So, right, let's start with number 1.
Great. So number 1 today is around the classic, supporting documentation, not tying into anything, and it being late. So the classic example is, the bank reconciliation. It's reconciled, but reconciled to what? Like, it doesn't agree to anything.
PPE register.
Oh, classic as well.
Not tying with the general ledger. That's always a good one.
That's a good one. And like, it's so common to get a trial balance from a client subject to this account, this account, this account, and this account to be finalised and adjustments to be processed.
Yeah. And look, if the financial statements are provided 3 days before the sign off and our numbers what we've been auditing don't actually tie, that makes our job very difficult.
Yeah, and it means like we might need to go back and recalculate materiality, flow on impact as we're sending you requests for things you think you've already provided, but we've had to top up samples. Yeah. So really the key takeaway from our side of things is ensure that you know what information needs to be provided to your auditors. Have a clear timeline that's realistic for you. If you don't think you're going to be able to meet it because you've got other duties such as month end or board reporting that you need to do, it's really important to let us know so we can, tweak the schedule a little bit and line up timetables better.
Yeah, it's all about communication. So, second one is around unclear management judgments and technical papers.
Love a good technical paper, Aimee.
Yeah.
So I think this is a great one. Like, as auditors, we love to see somebody's had the time, they've sat down, they've thought about the technical side of things, they've written up a memo.
What does the memo include?
Wow. Love when it includes a good objective. This is the background of the standards. This is how I've applied it to the transaction. And this is my conclusion on how things need to be accounted for.
Absolutely.
Worst case, you get the one-liner. Management says this.
Yeah, because I suppose from an auditor's point of view, it's not our job to provide the conclusion. It's our job to review the memo, but provide guidance even when the transaction's occurring. So that could be before the audit starts, and provide guidance throughout so we can get to the conclusion that everyone's happy with and compliant with the accounting standards.
Yeah, absolutely. So our top tip in this area is, step back, think about how did you get to that conclusion? What support have you got to provide to the auditors to line up what you're sort of saying. So if you're looking at historical data, to provide an estimate, have you got that data there and easily accessible? Because we will be asking for it.
And I think that kind of flows into the third one around timing of when the technical areas papers have been provided, because that really means that if we get those early, it can have a massive impact on the efficiency and how the actual audit goes in the end.
Yeah. So number 3 is definitely around having those discussions with your auditors early as well. Some technical areas can be quite complex, and not everyone has seen everything under the sun before. So I think it's a really good opportunity to understand your own transaction first, loop in the auditors either as the transaction's occurring or just afterwards, discuss what's the best approach, what standard does it fall under, and work together to come to a resolution.
Absolutely. And look, I think this is not necessarily relevant for all companies, but when it's the first year audit, we sometimes, depending on timing, we sometimes work with clients providing different sort of engagements instead of a full year audit. So I've done this with a few of my clients. So that's where we provide an agreed upon procedure around getting ready for audit. So where we might do specific scope of how you can be ready for audit, you'll see how all your numbers in your financials are compliant with the accounting standards, and make sure when you do have your full year audit, then it will go perfectly, efficiently, and a lot more streamlined.
Yeah, and I think it's a great opportunity to really get into some of those technical areas early and making sure that you do have the data behind and the controls and processes to collate the data early.
Yeah.
There's so many times we go out to a new business that has never had an audit, they don't have any accounting records lined up, they don't have the systems in place to recognize revenue at the right times. And I think this is a great way just, before you start preparing full statements, to get in early and make sure it's all aligned.
Yeah, and definitely with the first year audit, it's not what is there, it's what's not there.
Yes.
And we definitely see a lot more audit adjustments throughout the audit process in the first year. Naturally, because they've never been audited before, never really looked that it's compliant with the accounting standards.
Yeah, classic ones, share-based payments, con notes treatment, RevRec, have they deferred any revenue? Easy ones.
Absolutely. So fourth one, lack of internal coordination across departments. Tell me about this one.
Yeah, so we see this a lot with our larger clients that might have a really decentralized accounting function. Everything might be going to one person, but they may not be the person actually providing the information. And that can create delays. If other teams aren't prepared, they don't know what time the audit's happening, they don't know when the requests are required by, they don't understand what is the timeline to get the information back to the auditors.
Absolutely. So I think sometimes in larger organisations where they have the manpower, sometimes having more people involved in the audit can make it a little bit harder and more inefficient because there's a lot more people involved.
Yeah, and that's where we get the whole we're still chasing at loop situation going. So
yeah.
I think our top tip around this is really make sure you've got an internal timetable, make sure you've got someone centralised who's coordinating everyone, and that they're staying in contact with the auditors to make sure everything's, churning along and returning.
And that's generally the CFO, and they'll also having it, sometimes, depending on the timeline, daily meetings or weekly meetings to make sure the transparency and everyone's on the same page.
Yeah, agreed. And that sort of moves us into the last point there, reactive communication. So, we don't expect us to send you a request and you have the information back to us in 10 minutes, but going silent for anywhere between 3 days and 2 months is just an inefficient way of dealing with us.
Well, it's all about communication.
It is, Amy, you're very right there. So again, assigning that central audit liaison and having that coordination is really important.
Yep, exactly.
So, Amy, if you're a CFO or financial controller watching this, what's the takeaway?
Look, the key takeaway is get proactive, communicate early, document well, and looping the right people before the clock starts. Having that key timetable for us to have a planning meeting before the audit starts, before we even do any interim. All about planning, all about being organised and having regular communication throughout, and not having any surprises, because we want to make sure that communication is really good throughout the process, so there's no surprises right at the end, so it's a win all round.
Love that. And I think we've even made it simple for you guys. In the link below, you'll find a great checklist that'll give you a good starting base to prepare for your next audit. If you've got any questions on the back of today's episode, please feel free to reach out to either myself or Aimee. We'd love to hear from you. If you've found the episode helpful, we'd really appreciate you sharing it with people who you think might benefit from it. Our next episode is a good one. We'll be unpacking the question, what does going concern mean to your company? It'll drop next month, so keep an eye out for it.
Really looking forward to that one.
I have no doubt. Thanks for tuning in. See you next time.
See you next time.